SoFi reported quarterly financial results this morning that sent the stock price higher. Of course, I was happy to see that because I've had SoFi stock rated as a buy all year long, and I told investors I thought the stock was undervalued enough that you could even buy it before it announces earnings. So I'm happy to see when my viewers get to make money from my research. Of course, in this video, I will review SoFi's latest results, update you on the big picture items, the things that you need to know from this earnings release. And I'll also update my buy recommendation for SoFi, let you know if I still think it's a buy following these results.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so SoFi's management team said that we're off to a tremendous start in 2025, and we delivered our highest revenue growth rate in 5 quarters. With strong momentum in the first quarter, we are both accelerating our rate of innovation and increasing our financial guidance for 2025. Boy, was that great news for SoFi stock investors. Remember in my earnings preview video when we talked about what to look out for from SoFi when they reported quarterly financial results? And my focus was on the downside because of the increasing macroeconomic uncertainty, because of how the tariffs are impacting growth and slowing growth down. I was concerned how SoFi's business would hold up amid those economic difficulties. And what I saw was much better than expected. Instead of the company downgrading their guidance for 2025 and talking about stuff like, well, this macroeconomic uncertainty is impacting consumer behavior, and we are downgrading our guidance to prepare for the upcoming volatility. Instead of hearing downbeat tones like that from the company's management team, we see this, where the company's saying we're off to a tremendous start. We delivered record growth. With the strong momentum, we're increasing our guidance for 2025. And it was really the opposite of what I was expecting from SoFi. And I thought in the near term, the company would face significant headwinds as a result of the tariffs, but I was still bullish on the company's longer term results. So this was very positive news and much better than I thought. Overall, total net revenue grew by 20% and earnings per share grew by 200%. And the company has delivered positive profitability on the bottom line for several consecutive quarters now. A record 800,000 new members joined SoFi, and that was up by 34%. The company now has 10.9 million members. And this is the reason why, one of the main reasons why I'm bullish on SoFi longer term is because of the digital-only business model is so much more advantageous compared to legacy banks, which are still employing thousands of branch locations, which they are underinvesting in. I talk about how these banks, these businesses don't staff these locations properly. They don't train the people properly. And so they have what I see as wasted expense in these brick and mortar branches because they're understaffed and undertrained, and they're not serving the local communities effectively to justify that high cost of maintaining all those brick and mortar branches. Now, if they were to invest in those sufficiently where they add more value to their local communities, then they would potentially be a tool against SoFi, against these online only businesses. But these legacy banks aren't doing that. And I don't see that focus shifting anytime soon because the cost of labor is increasing so much that it'll be difficult for these banks to fill these locations with properly trained employees to help people with their services. And so as a result of those circumstances, it's favoring SoFi significantly, and they're attracting so many members because members see the value that SoFi offers, and they prefer this type of service compared to legacy banks, traditional banks, which are not serving clients effectively. They went on to say that with strong demand for SoFi's personal loans, the company has finalized deals with several third-party lenders, and they originated $1.6 billion of loans on behalf of these third parties in the first quarter alone. This is another category I talked about in the preview, how macroeconomic growth is slowing down. economists are increasing the probabilities of a recession in 2025. And under these circumstances, typically you'll see third-party lenders pulling back and investing less in loan origination, but they actually increased that, which was surprising to me in a positive sense for SoFi that they held up well in this regard. That was great news. Another another point of great news for SoFi was that they improved their credit performance. Annualized charge-off rates decreased from 3.37% to 3.31% for personal loans. Now the drop is not that big, right? 0.06 percentage points, but I was expecting move in the other direction. With macroeconomic growth slowing down and fears of a recession increasing, unemployment rate increased over the previous 3 months. I was expecting an increase in the charge-off rate, but we actually got a decrease, which again was more positive news for SoFi stock investors. So in more positive news, the company's loan originations decreased as a percentage towards personal loans. So you could see as of December 31st, 2024, the total fair value of loans was highly concentrated in personal loans. And I highlighted this as one of the biggest risks for investing in SoFi stock in the near term, because if economic growth slows down and we enter into a recession, the personal loans are going to have the highest percentage of defaults compared to the other types of loans that SoFi holds, which is student loans and home loans. But they had $17.5 billion in total fair value of loans originated in the quarter ended December 31st, 2024, out of 26.282 billion in total loans. So you could see that total fair value of loans only increased by roughly 330 million for personal loans, which for the quarter ended March 31st, 2025, and student loans increased by almost 1 billion from 8.597 billion to 9.571 billion. And then home loans increased from 152 million to 356 million, more than doubling. So I like to see that the growth in lending in the most recently completed quarter was primarily concentrated in student loans and home loans and less concentrated in personal loans, which decreased the percentage of personal loans to total loans, which decreases the overall riskiness of investing in SoFi stock, especially if they continue that trend over these next few quarters and over these next few years. Investors will get a company with less concentration on personal loans, which means the business is less risky, which is great news for investors longer term. So the guidance was something that I highlighted to investors to look out for, a potential decrease in the guidance because SoFi is more correlated to macroeconomic activity. And if macroeconomic activity is slowing, it would be bad news for SoFi in 2025. But I also said that SoFi's management team is notoriously conservative in their forecasts. And so I said that it was unlikely they were going to downgrade their forecast because typically to start the year, they give a very pessimistic forecast and then they increase their forecast as they move towards the end of the year. And that's what we saw here. And that's what I was hoping to see from management. They increased their revenue forecast for 2025 by 35 million. And they increased their expected adjusted EBITDA by about the same amount, by about 30 million at the midpoint. So they expect 35 million in higher revenue, and they expect 30 million out of that 35 million to flow to adjusted profitability, which was great news for SoFi stock investors. So now to the recommendation whether or not you should buy, hold, or sell SoFi stock. And you might not be able to see this on the screen, but the intrinsic value per share I calculated for SoFi was $20 per share, and the current market price is $13.38. So I still see the stock as being undervalued. And so I'm keeping my buy recommendation on SoFi stock, even after today's earnings results and the stock price increase. I still think this business is a great buy for long-term investors. Hey everyone, if you like watching my videos, then I've added a great complimentary product just for you. I've written a book that's available for sale now that highlights my 6-step investing framework. Even if you don't follow that investing framework, just reading it and knowing how I evaluate stocks will make it a lot more interesting and informative to watch my videos. I've added the link in the description below.